Hello everyone, welcome to today's market snapshot. My name is Craig Erlam, Senior Market Analyst at OANDA. Now it was a very slow start to the week, as many of you I'm sure will have noticed. The bank holiday over in the US and Canada really did weigh on news flow, it weighed on trading volumes, and that's mainly why I really didn't bother doing a video yesterday. The moves were very, very small. There wasn't really anything, in all honesty, to update on, both in terms of news, economic data, or actual market moves. And I'd rather, in all honesty, not waste my time or yours in order just to provide an identical update to what was provided in the last video. So I hope you don't mind not doing a video yesterday, but there is plenty more to talk about today, so hopefully you should find this video useful. I'll start with just a quick overview of what we had in the economic data front, because it has been a busy day in terms of the economic releases. I think the most notable thing in the early hours of the European session today was these PMI figures. Very strong PMI figures that we saw here earlier on today. It would suggest both that the economy in the Eurozone is recovering quite well, actually far exceeding expectations here. You look at the services and manufacturing PMIs, we're actually now back at the highest levels that we've seen in some time. That was 55.6, so really we're looking at the highest levels that we've seen since June 2011. Again, just before the Eurozone debt crisis started to get really out of hand, I guess. And the most surprising thing and most positive thing I think to come from these figures was the French PMIs, the services PMI in particular, because it's long been a big weight around the neck of the euro area. Really, it's the second largest economy in the eurozone, and yet it has been the slowest to reform, and it has been a massive drag on the region in terms of growth. But the recent data which we've had has been far more optimistic, and given that we are heading into the election campaign, given that the outcome of the election is far from certain, and in fact the leader in the first round of the elections is actually Marine Le Pen's National Front Party, who want to pull France out of the Eurozone. So with all this, you'd expect the economic uncertainty, the political uncertainty to actually be to weigh on the economy, but instead you're looking at these readings, the highest again since 2011, and 56.7 for the services PMI is very strong. It's actually stronger than the services PMI in Germany. So it seems that momentum is really with the French economy at the minute, and hopefully this can be maintained, but it is going to be tested over the coming months. But that's helped to lift European stock markets today. Bank of England Governor Mark Carney's inflation report hearing in front of the Treasury Select Committee was an extremely dull affair, unfortunately. The first hour, in fact, was just talking about the focusing on the forecast pre-Brexit, the same old political back and forth and the nonsense that we don't really want to hear about, and that was really reflected in the markets. In fact, the trading range throughout the entire report hearing was very shallow, and very really did reflect the dullness of the entire affair, to be quite frank. We've had the manufacturing and services PMI from the US today as well, slightly disappointing here, but you wouldn't think that based on what we've seen in the markets today. The US dollar up around 0.6%. That's the US dollar index, and that has been really the driving force behind many of today's moves. So we've seen strong Eurozone PMIs, but the euro actually is trading down against the US dollar, and I think what we're seeing in the US dollar is more reflective, to be quite frank, of the Fed commentary. Now we heard from Janet Yellen last week in front of the House Financial Services Committee and the Senate Banking Committee, striking a more hawkish tone, and I say slightly more hawkish tone. What she did do is very much leave March on the table without specifically referring to March, which seemed to get the markets excited. In my view, to be honest, I think March was always on the table in the Fed's head. The markets just never really bought into it, but the fact that she didn't take it off the table, I think, put it back on the table for markets. And I think other Fed officials have also followed in that approach of March very much being a live meeting. And the thing that seems to have woken people up in the last 24 hours has been Patrick Harker, who's a voting member of the FOMC. He actually made a reference to the March meeting and said it was on the table, and that seems to have just again driven these higher expectations that we will actually see a rate hike. Or not a rate hike per se, but at least a discussion on a rate hike, and expectations were so low prior to that that seems to have given the dollar another spring in its step. So we've actually got the CME Group FedWatch tool here, and you can see it's at around 22% at the moment, up from 17.7, so not exactly high, and nowhere near high enough for the Fed to actually act on it, I don't think. But if the Fed is intent on having a serious discussion on this, then it wouldn't surprise me if we see them talk it up more and more, which you would expect to be reflected in a higher US dollar. And it does look like momentum is picking up for the US dollar right now. As I say, we're looking back at these 105.25 levels. This is a big support level for the euro dollar. We've come back, we hit the 50 fib here, and it's continued lower. Again, these are bearish signs. I think if we see this level broken, then we've got to be looking back around these 104.50s, which is the most recent low. But it really wouldn't surprise me if we're headed back for the much longer term lows here in euro dollar, simply because of the US dollar appearing to suddenly catch a bid again. Cable's been a lot quieter today. Actually, it looks as though it may have picked up in the early parts of this afternoon, albeit from very low levels of volatility. You can see this was the volatility which we were actually seeing throughout Mark Carney's inflation report hearing. We're looking at 20 to 30 pip ranges, not very exciting at all, in all honesty. We have recovered from the day's lows, as you've just seen on the much lower term charts, but we are continuing to trade around these lower levels, and unless we make new highs, so I want to see a break really through these 125.15s, 125.20s, if it's going to convince me that we are going to see a shift higher. Because if we take a look at the 4-hour chart here, I'm just going to stretch this out. You can see that we've been trading within this moving average band, the 233 period moving average band, which has continued to offer support. But while this area has offered support, again, around the 123.50s, 124s, we have been making a repeated lower highs. So this is the big test now, 124.75. Sorry, not 125 was 125.25. Apologies, was the most notable recent high on the daily chart, but I think this could be the first signal, actually. 124.80, the most recent lower high here. Should we rotate to the downside on the back of this, then I think that you could see a lot more pressure coming around these 124s. A break above these may suggest that momentum has shifted higher, as it would certainly appear it has on this most recent 4-hour candle. But I guess this is one of the few currencies which is defying the US dollar strength at the moment now. Cable is now, the euro against the pound. We are seeing that edge lower once again. Again, we're seeing this repeated trend of lower highs being made, and yet at the moment 84.50 continues to hold. I think should we see a break of that, as the momentum would suggest that we're going to, then once again I hate to stress these levels just around these just below 84, maybe through even 83, does become extremely important. We've got the 200 and 233 day simple moving average band, as I've highlighted before, but then we've got this longer term head and shoulders pattern that was formed, and I think a break through 83 could be extremely bearish for this pair. Aussie dollar versus the US dollar. Again, the US dollar is helping to drive this lower. We did see it make these higher highs a few days back, but as I highlighted on the previous video, the momentum was really falling, was really lacking there, and the fact that we were in this prior zone of resistance, a long-term zone of strong resistance, there was a little bit of doubt that we could be able to build on this through 78. Instead, we have come lower. We haven't yet taken out the previous lows, so at the moment this is just being tested, I guess. But like I say, I think momentum is growing for the US dollar in general, which may help that move. Same with the New Zealand dollar versus the US dollar. We came back and we've tested those 71.40s. Again, I've highlighted in the previous videos, this is a 50 fib here around 71.20, previous low around 71.40. We've got this confluence of all the moving average bands. That's a 55.89, 200 and 233 moving average bands. I think a breakthrough this zone here around 71 through 71.40 could be quite bearish here. We did run into resistance a few days back around the 72.40s. This was just shy of the 50 fib of that move, but then you could see here that that was the previous zone of support here and resistance here that we did rotate down off of. I think the breakthrough those 71s to 71.40s will be quite significant here for the New Zealand dollar US dollar pair. Dollar versus the Canadian dollar, not really too much to report on. This, the 130s continue to hold. 132 still remains key here, as I've highlighted in the previous videos. US dollar versus the yen, we have seen it again push on higher today. The fact that we've made a new higher low is potentially quite bullish here, but I still do want to see a move through these 115s, or really 115.50s, 116s, if this is gonna start to look a lot more bullish. The early signs are certainly positive. We've found support ahead of the bottom of the Ichimoku cloud here. We've made a new higher low on a previous notable level of support, but I think we need to see the previous highs taken out, and then we've made a series of higher highs and higher lows, which would again support the bullish bias, and it would also take us through the top of the moving average band. Euro yen, on the other hand, potentially has a little bit further to go. We've made a new lower low here today, which would suggest there's potentially a bit more downside to come. If we see a close below the moving average here, that is the 89-day simple moving average, that could be a slightly bearish signal. Ultimately, it's going to be these 119s, which is the lower part of the Ichimoku cloud, which is going to be the big giveaway here. We are trading, of course, below the Ichimoku cloud on the 4-hour chart. I'm looking here really for momentum, because you can see that we've made these new lower lows. Appear to be catching a bid on the last couple of candles, and momentum, you can see on the MACD histogram and the stochastic, seems to be disappearing from this. So it wouldn't surprise me if we're going to run into some support in this kind of 119 through 119.70s, which would be, of course, bullish for the Euro yen, which continues to trade above the cloud on the daily chart, and therefore does in the longer term remain in bullish territory. Sterling yen, like the dollar yen, is looking a little bit more bullish though. We've made another higher high on the daily chart on the sterling yen pair. Again, this confluence of moving averages I think is quite important, because off the 89-day simple moving average, we did run into resistance around the 55 and also the 233-day simple moving average band. We've then come back, we've tested the lower end, the lower part of the moving average band, which is on the 200-day simple moving average, and we are now pushing higher. So it looks like we're potentially about to merge out the top of the Ichimoku cloud once again, and I think a break through these 143s would confirm that, because that would give us a higher high after running into resistance here previously, but it will also rebound, take us out of the moving average band and out of the cloud as well, and then that would start to look much more bullish from there on in. Gold, we've seen a little bit of a rebound now on the back of some dollar weakness. I'm wondering how. Yeah, we seem to have seen a surge, another surge higher off of 1234 in the last 15 minutes or so. This was starting to look a little bit more bearish. I think the key really here is going to be how we trade off of these 1243s, the most recent high, which is 1243.91. The reason for that is, as you can see here, this most recent high just failed to make a new high from the one made back on the 8th of February, and on that move the momentum, as you can see on the daily chart here, was severely lacking. So it looks like we are seeing another push to the upside, but if momentum isn't with the move, then I don't hold much hope for it. That doesn't mean we can't make a new high here, but I want the momentum to confirm this buying if I think we're going to see a move through these 1250s, which at the moment, and I stress at the moment, looks unlikely, but we'll see how this continues to trade for the next couple of days and whether we can see a break of these 1244s with momentum helping behind it. And I think that's going to be absolutely crucial if we're going to break through what is a very big level of resistance. What has been quite interesting today has been these moves in oil, because we are trading back at the upper end of the trading range which we found ourselves in. You can see here around these 54s to 54.50s, and we are pushing that in WTI, and I think a breakthrough this would be very significant. If we take into consideration that over the last 2 weeks we've seen substantial inventory bills in in oil, which should be bearish, but it seems that people are far more focused on the compliance of OPEC and non-OPEC members, including Russia and Saudi Arabia, most importantly, with the output cuts. I think people are clearly buying into this compliance and the potential for an extension, and I think that's what's potentially driving it higher. And I think a close above the most recent highs around these 54.50s could be quite bullish initially into the 55.50s, but beyond that, I think we could be looking much higher. Of course, we haven't traded higher than that for some time now. And I think a break through these levels, really, we could be looking back towards these 60s, which would be a logical area of resistance on WTI. In terms of Brent crude, again, we are the upper end of this range is these 56 through 57s. A break through 57 once again is looking quite bullish. And I think a break through these levels, you could be looking at resistance around the 58s, around the 59s through 60s. But really, I think we'd even be looking a little higher than that, maybe towards around the 62s initially. I don't think we've quite got the legs to get to $70 yet, to be honest, in Brent crude. But I think 62 would be realistic should we see these 57s taken out clearly on the belief that this production cut is very much working, despite the higher rig count in the US, despite the higher US output and despite the higher inventory builds. Clearly the focus here is very much on the compliance between OPEC and non-OPEC on production cuts. I think that's pretty much all we've got time for today, guys. I hope you found that useful. As always, feedback below is welcome, and I'll provide another update over the next day or two, depending on how, again, the markets are performing. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.